What's going on, YouTube? Stocks by the Numbers, welcome back. Today is Thursday the 16th, and I wanted to do a very quick update here on Nokia, ticker symbol NOK, listed here on the New York Stock Exchange. Stock right now, $3.53, down about 6 cents, 1.8% here on the day. This is the last time that we looked at it, May 25th. Company reported earnings and paid out dividends twice since we looked at it. Stock was right here at around 396, right around this key level that I spoke about. And as we see, it basically tried to bounce and stay above this level for several weeks after we looked at it. And then we began to drop going into earnings below that level. And then as we see, the company misses on the top and bottom line, and the stock tries to maintain that level and actually get above it, and then of course takes the next leg lower, and then tries to climb up and retest $4, and we've been bouncing around since then. Then we get into September, October, the markets were selling off big, the stock began to chunk down into the mid to low threes, and then of course, earnings come out, and we have a massive miss on the stock. 33% miss on the EPS side, over 13% miss on the revenue side by over $800 million. That is very, very bad. I cannot lie here in the short term. However, what you're seeing is here, it's almost as if Wall Street had to react and bring it down to these lows here of 305 as we see, but then also at the same time, they're hearing that the company is planning to do this big restructuring of their business and of their whole network, really, over the next 5, 6, 7 years. And also, in my opinion, I still say that the numbers are tremendously undervalued when you look at a stock like Nokia, in my opinion. So that is why I feel that the stock immediately began to bounce here. Now, of course, mind you, this stock was rallying. Again, look at the date here. Right here, the 30th, the 31st, I think, is when the market began rallying. But as you see, the stock went from 305 back up to 330, rallied almost 10%, while markets were still selling off. Right? And now here with November, that's when markets started to climb, and obviously the stock went even higher, getting above 360 plus. Right now, I'm looking at a 1-year chart, and we can see that the stock here is just slightly above the 20-day moving average here that I'm watching. Now, we draw our trend line here along the bottoms of these candles since the last earnings report, and now we have our new resistance trend line. So if we come down here, roughly like 10, 12 cents and retest this trend line, probably meeting up with this fib, probably in the next day or two, perhaps. But 346, we could potentially have a bounce and get back up to, like the low to mid 370s here and potentially retest this resistance trend line now drawing across the tops of our candles going back to mid-July. So, of course, the company... the stock could, of course, go lower. We know this, but chances are, in my opinion, it's probably going to go higher. We could, again, meet up with this 340 level, but I actually think we do see 370. But more importantly, I want to talk about this news article that came out because, as we see here, Nokia unveils vision to boost future network architecture. Now, there's a very, very long article, as we see, right? It just keeps going and going and going. But what they're showing you here in this chart is very interesting because it's showing you Nokia versus the wireless equipment market. And as we see, when this really started to drop down here throughout 2023, you can see that Nokia stock has basically been following that same path. So what the company is now planning on doing is unveiling its technology strategy 2030, aimed at addressing the critical components that will shape the next phase of digital transformation over the next 7 years. So they really go on and on. Again, I'm not going to read this whole article. If you want, I'll link it in the description for you guys. But basically, what I'm getting here from that article is that this company, again, is basically taking a step back and saying, okay, where are we going to be 7 years from now? And can we today begin implementing these changes so that once we go into 2028, 2029, 2030, we're already hitting the ground running, and now our competitors are envious of us and we're potentially the industry leader in the telecom sector. So it's a rough time to buy it because, of course, again, they could bring it back down to 320, 310 if markets begin to sell off, which in my opinion, we went way too high, way too quick. I can appreciate the fact a day or two ago, we had some positive economic data. People want to say, oh, that's adding to the rally. That's the reason why we're up. However, again, we rallied for basically every day for over 2 weeks just because the Fed had a meeting and didn't change anything. And now if you look online, you're seeing videos of, people talking about a potential reverse market crash where they basically just balloon up the value of the stock market because the value of the currency has become, such and such, has become more and more, how am I trying to say this? The currency got wrecked, right? So it's worth less. So everything has to balloon up. They compare it to, Zimbabwe printing their $100 trillion notes and whatnot. That was basically compared to about 40 cents US at the time. So this is what I mean. If something like that happens, then money becomes worthless. Then something like the Dow here at 34,000 is gonna, balloon up to like 34,820,000, and it's just going to completely decimate really the entire economy when you think about it, which is the end result of each one of these reverse market crashes. But going off on a little bit of a tangent here, long story short, I still say, in my opinion, that it is a buy. And obviously, when the company is laying out a 7-year forecast of what restructuring they're trying to do, you can't buy it today at 352 and expect to be up 30 or 40% by the time the ball drops, right? So you have to understand what you're buying, how you're buying it, and what to expect, what kind of time frame to look for. Now, of course, sometimes we're looking for like a 10% run in a stock over a month, and it happens in 2 or 3 days, right? I mean, hey, sometimes that happens. But the point I'm trying to make is, if the company is completely looking to restructure basically its essential core business, planning for what can happen 6, 7, 8 years down the road, now this falls into a category of a Netflix, in my opinion. Now, I know Netflix, a lot of you younger people, you know Netflix only one way. However, the company has actually been around for quite some time, and it initially started almost like a mail order Blockbuster, if you guys remember. You would kind of just pick the movies you wanted to see, and they would just mail them to you. They would just mail you DVDs, enclose the return envelope for you to send it back to them, and that's it. You paid a couple of bucks for the service, right? Then Netflix decides to shift its entire business to digital. And of course, no one really understood why they were doing this, or if it was a good time to do this. Potentially they should wait, or they should try to get their money up, or whatever the hell. I couldn't tell you specifically what all the news articles were saying at the time, but I just remember hearing about the story, and then just hearing the negative backlash that Wall Street was giving them. And then what happened? The stock was flying underneath the radar. They're doing their restructuring. Now it finally actually takes place. And we've shifted to the digital world. And what happened? As the other entertainment companies began to shift to streaming, Netflix was already there. You understand? So that's why, as the other companies weren't offering the same service and weren't giving the customers what they wanted, they were jumping ship and everyone was jumping to Netflix. Which is why, after they shifted to digital, the stock went from a handful of dollars a share to several $100s per share. Now, I am not sitting here saying that this $3 stock is going to 300. That's not what I'm saying. What I'm saying is Netflix saw and anticipated what the entertainment it's really the entertainment and media markets, right? What they anticipated, what the entertainment and media market would look like several years down the road. So then when the shift actually finally happened, they were already up and running, and now everyone wanted their product. Meanwhile, again, all of their competitors and all of their peers had to first begin the digital shift. And now, as we see, everyone has their own app and all this nonsense, and you're paying monthly fees for everyone's digital streaming services, which of course, Netflix, one of the first ones through the wall. So again, like they say, the first one through the wall is always the bloodiest, but someone has to go first. And what we're seeing here, again, it may take a couple of years, so we may have a stock here at 3.5 that could not move for the next 1 to 2 years, depending on how some of these earnings start to come out and if we have any positive catalyst, of course, over the next couple of years. But more importantly, if they're ahead of the curve in 2028, 29, 2030, and they begin to absorb more and more market share from the rest of their telecom competitors because they had the foresight to see where the market was going to be by 2030, then what's going to happen is essentially the same thing we saw with Netflix. This company will begin to consistently grow and beat earnings and become more and more profitable and increase share repurchases and increase their dividends and become a brand name in the space, potentially number one in the space. And the whole time that's happening, you're going to have the other telecom companies potentially first beginning to do the restructuring that Nokia did. So again, we could, of course, be just wishful thinking because it's 7 years down the road, so we don't know if they will eventually end up capitalizing off of this restructuring or if it turns out to kind of be a bust. But in my opinion, they do still have the revenue to support it. Minus 2020, as we looked last time, the company basically maintaining this $26 billion revenue mark. I know for 2023, estimates are about $24.5 billion for the year, and Q4 coming up in February, $6.95 billion. Q4 traditionally is their biggest quarter, as we see here, so we don't know yet if the company is going to beat the fiscal year estimates for 2023 revenue. However, the company, again, has a lot of positives. Again, they reinstated their dividend. In my opinion, that's a good sign. The revenue has technically been hit and miss on the annual side, but again, the EPS, surprisingly enough, has actually come in above estimates and been consistently climbing for the last 4 years. So obviously we're taking a dip in 23, but again, we are potentially at the beginning of the restructuring. But the debt consistently decreasing, right? We like that. We still have assets outweighing liabilities. And of course, the book value per share, as we see, was down 343.5 and has since climbed up above $4 for now the last 4 quarters in a row. So that means, again, book value, if the company has to close its doors and liquidate everything in its name, it is technically worth $4.07 per share. Right now, stock's $3.53. So, whatever you do with that information is entirely your own prerogative. But when a stock is trading sub-book value and they're not going out of business, in my opinion, I think that is a very good sign and should be viewed more as a positive than a negative. Stock right now, 0.79 times sales, the lowest it's been going back to March of 22. 0.88 times book value. We just looked at that. Basically, the lowest it's been going back for a couple of years. And again, I know on the profitability side, you got things like the EBITDA and the net margin percentage that have taken hits. The operating margin percentage took a hit. But, we can see things like the gross margin percentage slowly ticking up for the last 3 quarters in a row. So this is why, again, it's definitely going to take some time, especially if the company is kind of just going into like this rebranding, restructuring phase. But, at the end of the day, it could turn out to really pay off for shareholders. And again, I have to use another comparison, almost reminds me of IBM, right? IBM was just kind of very complacent. They were just kind of idling along. And while other tech companies were building up their IPs, coming out with, groundbreaking hardware and software, IBM was just kind of chilling in the background. And then what began happening? IBM actually began losing market share. Revenue began to consistently decrease quarter over quarter, year over year. And you had all the other tech companies increasing those numbers, basically just taking the market share away from a company like IBM. So IBM, they went on this rut for several years and they were just dropping down, flying underneath the radar. People thought it was slowly becoming a dead company. And then, of course, they do a little restructuring. I know they got their profitability in order. Now they potentially hit that bottom, and now they're making that U-turn where all of a sudden revenue is climbing back up. We're coming in above analyst expectations. We're beating earnings now. Price targets are getting upgraded. And that's what I was saying in past videos. that when you beat earnings and you start to do it consistently, the more and more positive catalysts come in to help propel the stock higher. And now people are talking about IBM like, it's another brand name tech stock, and it's a name to keep an eye on. When for the last 4 or 5 years, if you mentioned IBM, nobody was bullish on it. And that's the point I'm trying to make. Sometimes these companies have to go through their changes and crawl through that pipe full of crap. Our Shawshank Redemption, metaphor. You gotta crawl through the crap to come out clean on the other side. So that's why, again, in these next couple of years, it may be rough for a stock like Nokia, but over the long term, I personally still like the stock, and I would be a buyer. And the MACD, again, has been rising like crazy. The stock's been on a tear, bouncing off those bottoms, climbing with the rest of the market. But we do potentially have a little plateau happening here with a potential cross, because we closed yesterday above the 50-day moving average, but it looks like a clean rejection off the top Bollinger Band, and now it looks like we dropped a little bit to kind of fill this gap, and I'm just wondering if we come back down to about 340 and fill this gap that was hit about 2 weeks ago. So not exactly sure if tomorrow will be up or down, but again, when we're looking at it through a long-term lens, it really doesn't matter if it's up or down tomorrow. But RSI sitting here at around 55 right now on the daily. Could, of course, go higher, but the MACD has really been climbing. And if we switch over here to the weekly, we can see the RSI at about 41 1/3, so that could definitely continue over the next couple of weeks. And we have the MACD on the weekly actually curling up, potentially about to cross, but I do have a feeling that it may pause for a day or two before taking that next leg higher. Next leg higher on the weekly, mid-Bollinger Band retest would be about 370, 371. And if we switch back here, again, we can have a pullback to this trend line potentially, and the fib level here of about 346 before we bounce and we go to the top of the range. Look at this, 373, 374, potentially 375, and again, mid-Bollinger Band on the weekly, 371. So that, in my opinion, is going to be a key level to watch. But I have to say, even though they may have taken a little bit longer to begin to trim the fat and, do some layoffs and whatnot to increase profitability, they may be a little late to the party. Because I know we've seen other telecom stocks like Verizon do this already, and now we're seeing them come in and increase revenue and increase profitability and beat earnings. And Verizon went from these lows of 31, 32, now VZ, where is it? Now VZ right here sitting above $36 a share, right? So if you believed in the company in the long term and you stepped in and you averaged down at those lows, chances are you may already be up on the situation, but, you're still holding it for several years. So that's why, again, it may be rough to position yourselves into these situations a little early when they're going to need some time down the road to really make it worth your while. But again, if we turn around in 2030 and Nokia is $24.50 a share, consistently increasing their dividend for the last 5 years, and now they're one of the industry leaders in the telecom sector because they did the restructuring before everyone else did, you're not going to sit here and say, oh, when I first bought it at 3.5, it dipped back down to 310 before going higher. You know what I'm saying? That's what I always say. That's not going to be an issue. So when you're looking at a situation like this for long-term growth, when you have it on sale, again, right now, 354, book value is 407. When you have a situation like this on sale, in my opinion, this is when you slowly begin to build a position and accumulate as much as you can, so that if it does end up panning out over the years like we're anticipating, obviously you're just going to be up even more and even more. But I'm going to end it there because I ended up talking more than I wanted to. So stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And apparently I have to say that every video, because if you watch every video on YouTube, they tell you to like the video and turn on notifications and all that. So I'm assuming all of those metrics impact how much revenue your channel generates. So again, that is how you help me help you. Like the video, subscribe to the channel, of course, it means a lot to me. Join the Discord if you want, link in the description of every video. But more importantly, moving forward, like I always say, I understand that markets are very rocky, everything's very uncertain and volatile right now. So I do want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next one.